Bradley gave us earlier. I think you said that, was it 19 million of fraudulent claims last year? Yes. And you also described that as, I think, 4 to 4.5% of the premium.
Of premium, that's right, yes.
And you would contend, I think, that the level of fraudulent and exaggerated claims is one of 3 factors to consider in terms of quite high premiums facing people.
It is. It is a factor, but it needs to be put in perspective. It's 19 million out of a total claims cost that we have of 500 million. So it's important and a factor. A much bigger factor is the level of awards for soft tissue and whiplash.
Okay, but just to stick with the 19 million for a moment and the fraudulent claims, which are an important part of the narrative of the insurance industry. Could you remind me what your profits were last year?
Our profits last year were 89 million.
Is 89 million 4.5 times 19 million, give or take?
Yes, your maths is right.
And so that's about 20% of a premium, your total premiums then?
I think it's
would you say it's fair to say that profits and the extortionate profits made by the insurance companies is a substantially greater contributor to the very high levels of premium than fraudulent claims?
No, I wouldn't. I think we need to look at profitability over a period of years, and last year was a very strong year. On average, I said for the last 5 years, profitability that we made was about 38 million per year. That is the level of profitability that's needed for our shareholder to want to continue to operate in this marketplace.
But say last year, your profits made up about 20% of your total premiums, whereas what you describe as fraudulent claims made up about 4 to 4.5%.
Our total premiums last year were 770 million.
You described 19 million as 4 to 4.5%, and so therefore doing the maths upwards, you end up with close to 20% of your total costs, of your total premiums. So why, when you mentioned the 3 factors, and I think, sorry, that was, Mr. McGrath had 3 factors, and I think you also have 3 factors. Why don't you mention the very high rates of profits in the company as being a contributing factor?
I think, as I mentioned in my statement, when we look at the motor and liability markets over the last number of years, from 2013 onwards, the Irish insurance industry paid out 1.1 billion more than it took in premiums. So I don't think the market can be characterised as one where there's been excessive profit. There's been a large number. There's been some very large losses, and some companies forced into liquidation as a result. So I don't think this is a market where profitability is excessive when you look over a reasonable period of time. Okay,
but let's look over a reasonable period of time. For example, the central bank figures. It's accurate that the central bank figures would indicate that from 2002, now you have a total profit for insurance companies operating in Ireland of over 3 billion euros since 2002. Isn't that the case?
The total market profitability, I think, I don't have the number to hand.
I'm fairly certain that that's the figure. We used it, for example, in the report that we produced. At that stage, it was 2.8 billion from the central bank. But since then, obviously, you've had a couple of years of good profitability, so you're over the 3 billion mark. That's a healthy enough profit, no?
Well, the profit margin that we aim for is €5 for every 100 that we take in from customers.
And if that 3 billion hadn't been gone in profit to shareholders since 2002, that would have resulted in a collective reduction in premiums of about 3 billion euros, wouldn't it? The profit that people pay for in their premium, they don't get any benefit from it, do they?
Well, I think in any market, if you want companies to compete and continue, they need to make a profit. Our shareholders would expect us to make a return for this market. If it's a market where there's no profitability, you'll have less and less companies wanting to compete and bigger problems around supply. So I think I would distinguish between a profit margin that's reasonable to reflect the investment we have in this marketplace. I don't think we have excessive profits.
That's if you accept that the insurance industry has to be run on a for-profit rather than a non-profit basis. That's the premise. Of course, you're a private company, of course. But to follow that logic, your shareholders expect you to make a profit. Therefore, if cost of claims were to be reduced, wouldn't you be under some pressure from your shareholders to see that a portion of that reduction in claims goes in increased profits?
I think it's important that we offer value to our customers. If you take the motor insurance, the average renewal price that a customer is paying this month is 7% less than paying this time last year. So when we see a small reduction in claims frequency, because it's a competitive marketplace with over 33 companies competing, we adjust our prices.
But if you could see that a large portion of a reduction in the cost of claims could go to profits, you would, wouldn't you? That's how a company operates. You operate to maximise your profit. Partly
to invest for the future. So we are using some of the profit we've made to develop into new sectors of the market, on new systems, on premises and infrastructure. So we have to make a profit to support the ongoing success of our business. And the market, because it's a small market with a lot of players, is very competitive, and we will make, if margins were excessive, more companies would come in. And
well, I mean, we had Dr. Cyril Ruin from the central bank during our hearings, and he described that as an act of faith, that we have to have, it's faith in the market that a high rate of profit will result in more entering and so on. But it's not the case, is it, that there is an automatic correlation between cost of claims going down and premiums going down, because there's an intermediate factor there, which is the level of profits that the companies choose to take.
It is a factor, sure, but I go back to something I said earlier, that when the PIAB was introduced back in the early 2000s, there was a 41% reduction in premiums. So clearly, when there was a major change previously which reduced the cost of claims, that fed through to customers. And it'll happen again.
Maybe just to allow Mr. McGrath and Ms. Muldoon a chance. I mean, let me just pose it generally, and feel free to respond. But I think that the insurance companies have a very deliberately crafted narrative about why people face such outrageously high premiums. And that narrative is about fraudulent claims, excessive claims, too high claims. And what is always left out of the narrative, not coincidentally, I would argue, is profits. And the very substantial profits made by the insurance company over an extended period of time. And I accept that it's an industry whereby it goes up and down. But over the last couple of decades, very substantial profits have been made by the insurance company. That's a significant contributing factor, which you don't like to mention. Isn't that the case?
No, I disagree. I think, as I say, we in Allianz price to a margin of 6%. That is a target that Allianz operates right across the globe in the 80 markets worldwide that it operates in. So they don't ask any different level of profitability to the Irish market than they do in China, in the US, in Mexico, in Germany itself, or anywhere else. That we believe is a fair level of profit, and one that is required to remain a sustainable insurance company that remains solvent and run on a very fair and balanced way in the longer term. We've had many examples in this market of companies who have taken more maverick approaches and have cost the Irish businesses and consumers many, many millions, and we're still paying for most of them in the form of levies. In relation to passing on savings from reduction in claim costs, I will reiterate that we will pass on any reduction in costs in our premiums. I think this market is really competitive.
You won't take any of it in profits?
No, we have a target level of profitability, and we will adjust our pricing based on that. So if claim costs come down, that's it. I mean, basically, insurance companies need capital to make sure they're here for the long term. Shareholders need a return on that capital. So that return doesn't change, and that's what we price to. So if the claims come down, they get passed on to customers. And as Phil Bradley from AXA pointed out, that's exactly what the industry did the last time there were reforms. I think when you look at it realistically, as I say, there's 8 big companies have a very significant presence here in this market, but there are many more operating through brokers and through freedom of services. If we didn't pass on those pricing reductions, we would lose business, and very quickly, because we would be open to other people who come in and to price at lower levels, and we would lose business. We're not in the business of shrinking to greatness in Allianz. We want to grow our business, and we want to grow it sustainably for the long term. So again, those things will be passed on, and it's not a leap of faith to think that the market would bring on capacity. That's exactly what happened in the past decade or 15 years you speak about. Lots of that capacity has been described as naive capacity, has come here on a freedom of services basis, but many of those companies came in and priced below cost and have drove prices down to a level that was unsustainable, which was a factor in where this crisis began.
Yeah, I don't have much to add, Deputy, other than it feels like I'd have to amount to defence of capitalism. I mean, it is a business. It seeks to make a profit. The only alternative to that is the state provision of insurance. And I suppose we'd have to go 9 rounds on whether the state could be as efficient as a privately run business that was seeking to make a profit in return for its shareholders. So in the absence of a state-run system and the inefficiencies that a state-run system would be likely to bring with it, we have a heavily competed capitalist-based, free market-based system where we are making modest return on equity to reward our shareholders, and our shares are for sale every day in the public markets, and they're putting their money at risk. I believe that we are heavily competed in the farm sector. It's the sector we know best, so I apologise for using it as an example again, but we're heavily competed. We have heard from my French colleague that he has entered the farm market. There are others competing, the Swiss and the British as well. And if we are charging a price that's unsustainable, I'm sure my German colleagues will join us. So it is a heavily competed market, and the market sets the price. And if you are inefficient or if you're not making a profit, then you're out of business, and that's the system we're in.
Thanks, Josh.
Senator Conway Welch.
And thank you for